Hey everyone, welcome to another episode of The House Always Wins. I'm Jessica Eiroa.
And I'm Andy Eiroa.
And today we're going to go over the different contingencies within the purchase agreement that protect you as a buyer during the home buying process. So Andy, the first one I want to go over is the due diligence period. What is it and how does it protect the home buyer?
Yeah, great question. So the due diligence period is a set period of time determined in the contract, typically anywhere between 7 to 10 days, where we would order a home inspection. The inspector would go out. He would find any deficiencies in the home. He would put together a report for us. He would email it to us typically within 24 hours. And then we would put together what's called a repair request, send that over to the seller. They would then have three options. They could either accept all of our requests, they would deny everything, or they would counter back. And when they counter back, they could choose to only fix certain portions on the repair request, or just give us a seller credit, or a combination of both.
All right, awesome.
And that all needs to be done within the due diligence period.
Perfect. Mm-hmm. So outside of the home inspection, like let's say I get under contract to purchase a home. I wake up the next morning and see a different house that I love even better. Could I just change my mind and cancel and get my money back? Yeah,
that happens quite a bit. So let's say you decide to drive the neighborhood at night, something spooks you, your wife doesn't want to buy the home anymore, or husband, whatever the case may be. You can cancel, get the money back, get your deposit back, and yeah.
So in general, with the due diligence period, you can cancel for any reason. You don't even have to provide a reason. If you want to cancel, you can just request a cancel and get your earnest money deposit back during the due diligence period.
Yeah, it could literally be anything. It could be your grandma doesn't like the house. It could be your dad doesn't like the house. It could be, you don't like the toilets anymore. It could literally be anything. As long as it's within the due diligence period, you can cancel and get a full refund back.
The toilets aren't elongated. That's not going to work.
Right, it's not going to work for me. Right, I can't sit on my throne the way I like. Right.
Okay, perfect. So due diligence period, really great protection from the get-go.
Correct.
All right, awesome. So the next contingency that I want to discuss, and involves me a bit as the loan officer, is the loan contingency. So Andy, what is the loan contingency and how does it protect the buyer?
Yeah, absolutely. So it definitely does involve lenders more so than realtors, I'd say. But the loan contingency is, again, a set period of time within the contract that you have to get final loan approval to purchase a home.
And to chime in and piggyback off of that, that means, if you've got, say, 21 days with your loan contingency to get final loan approval, then you need to be active in responding to your loan officer during the loan process. I'm going to have requests to you from the underwriter, additional items that they need in order to issue final loan approval. So it's really important that you get those requests back to your loan officer timely to ensure they can get your final loan approval within that contingency period.
Correct.
It also allows for any unforeseen circumstances that come up that may disqualify you from financing, where you can get your earnest money deposit back and cancel. So for example, let's say
you lose your job within the loan contingency. If you lose your job within the loan contingency, then you can cancel and get your EMD back.
Because you no longer qualify for financing with no income.
Correct. But if it falls outside of the loan contingency because you were not getting a lender their requested documents in a timely manner, let's say, then you would not be eligible to get your earnest money back. It would be at the seller's discretion. I don't want to say you're not eligible, but it would be up to the seller at that point.
Other common issues could be if you're receiving a gift for your down payment from a family member, and suddenly during the loan process, they decide they're not going to gift you that money, and now you don't have down payment funds. If it's within the loan contingency period, you can cancel and get your earnest money deposit back. It's really important during this time, like for example, myself as the loan officer, to communicate with the realtor how the loan's going, if I foresee any issues, if we need an extension on the loan contingency period to provide extra protection time in case we're having some issues that we need to work through. So overall, loan contingency, a really important one, because you can't close on the home if you can't get the financing. And that's going to protect you if an issue does arise to get your earnest money deposit back.
Correct. So long story short, don't drag your feet and get all your ducks to your lender.
So next I want to go over if there's any protections in the purchase agreement for the home buyer around the HOA rules. What if they don't like some of the rules? Is there anything in there for that?
Yeah, absolutely. So what that's called is the HOA Resale Package, or CIC receipt. So basically when we're in the transaction, the seller, if the home is within the HOA community, has 15 days to provide you in writing the HOA Resale Package. And that basically just outlines all the rules and regulations of that said community. And once you receive that package in writing, you then have 5 days to either accept or reject all the rules and regulations in there. So for example, let's say you're a big car guy and you have 7 cars, but the HOA doesn't allow, on-street parking or for you to work on your car in your garage, then you can cancel and get your money back.
All right, awesome. Even if there's like restrictions on the number of dogs you can own, you could cancel and get your deposit back.
Correct. Yeah. Let's say for whatever reason, the HOA only allows you to have 2 dogs per home and you have 4 dogs as an example, like we have, then you can cancel and get your money back. No problem.
All right. Awesome. Great protection there for the home buyer. So the next one I want to go over is the SRPD. So first of all, what does that even stand for?
So that stands for Seller's Real Property Disclosure Form.
And is there anything within the purchase agreement that protects the home buyer related to the SRPD?
Yeah, absolutely. Good question. So first of all, the seller has 5 calendar days to provide you with this form. And this is where they would disclose anything big or small that's wrong with the property. So plumbing, roofing, electrical, appliances, an outlet being out that they know of, anything.
Okay, and so let's say I receive this SRPD form as the buyer from the seller after 5 calendar days. Let's say it's day 16, and they disclose a huge roof issue that the home inspector didn't catch. What are my options? Can I cancel and get my deposit back?
Yeah, absolutely. So at that point, we would have a couple options, actually. So we can continue to move forward with the purchase if you're okay with that, or we can cancel and get a full refund of your earnest deposit back because it was disclosed to you after the 5 calendar days.
So the seller was in breach of contract, basically.
Correct.
Now I have the option to cancel.
You have the option to cancel if you'd like.
All right, awesome. Well, I'm glad there's that extra protection there.
Absolutely.
So next, let's talk about the preliminary title report. Can you go over really quick, like what is the preliminary title report and if there's any protection around that in the purchase contract?
Yeah, around that. So the preliminary title report is basically something that the title company will provide to you as the home buyer. And that's basically just going over if there's any liens or judgments against the property. So to make sure that you're obtaining clear title. So for an example, it's making sure that the previous seller didn't have a contractor do any work and then the contractor was never paid and then they put a mechanics lien on the property. If you were to buy that home with that lien on the property, that lien would then be passed on to you and you would be on the hook for that lien.
And from a lender standpoint, underwriters aren't going to be able to approve financing for a home if it doesn't have clear title. So if there are any liens, like Andy mentioned, on the house or judgments, those will need to be cleared, typically meaning the seller is going to have to pay those judgments and liens off at closing so you can obtain the home with clear title. And if for some reason you do have issues with the preliminary title report, you can't obtain clear title, then you can cancel the contract and get your earnest money deposit back.
Yep, correct.
All right, so the next one I want to go over is the appraisal contingency. So Andy, what is the appraisal contingency and how does it protect the home buyer in the contract?
Yeah, absolutely. So the appraisal contingency is a set period of time within the contract for you to get the appraisal back and then renegotiate if there are any issues with the appraisal. And also if there are any safety issues that need to get addressed for loan purposes, that will be addressed in the appraisal as well.
So just to piggyback off of what you said, issues could be if the value per the appraiser is less than the contract price, that would cause an issue.
Correct.
Or if there's a safety concern, maybe there's a pool that isn't operational and they don't have it filled with water.
Correct. Or water heater straps is always a big one. That's pretty common.
Smoke detectors not being installed in the home per code. Those would all cause appraisal safety issues that the seller would have to address.
Correct.
So what happens if the appraisal report is received back and one of those issues is present, but it's received back after the appraisal contingency period is up?
Yeah, absolutely. So let's say the appraisal contingency period is 18 days. Let's just say that. If we get the appraisal back on day 19 because we dragged our feet in order to late or whatever the case may be, then we would not be able to cancel and get the money back. So there would be no protection in that scenario.
All right, so very important to get your appraisal back within the appraisal contingency period. So should there be any issues, you still have the option to renegotiate with the seller or cancel and get your earnest money deposit back if you can't find a new happy medium between yourself and the seller.
Correct. And for me as a realtor, it's really important to get with my lender and ask them, how long do you need for the appraisal contingency? Because some lenders only need 15 days, some need 21. Like I said, it's just really important for me as a realtor to be always communicating with my lender.
And it's important for me as a lender to communicate with the realtor if there's any delays or issues with the appraisal, because then you can try to negotiate to extend that appraisal contingency period if needed.
Absolutely.
All right, great.